MLPs, master limited partnerships, have outperformed the S&P 500 over the past 5 years. Many investors, though, still don't know what they are. They are publicly traded. They grant partnership shares and investments in real estate, natural resources, commodities, and generally pay out a vast majority of their profits. Darren Schuringa is the founder and managing partner of Yorkville Capital Management. So the firm runs MLPs, has also developed 12 different benchmarks to track industry performance. He is with us now to shed a little light on an industry that is not particularly well known or maybe well understood. Darren, welcome to Money Moves. Glad to have you with us.
Thank you, Deirdre.
So why don't we just start? We gave a little definition there, but I'm sure that was a rough sketch compared to what you know. What do you feel like the average person needs to know that he or she doesn't?
Well, I think right now when anyone looks at MLPs, they think of pipelines and infrastructure. And Yorkville recently completed probably the most comprehensive study ever done on the MLP asset class in terms of breadth and depth. We looked at 100% of partnerships in existence today and went back to the inception of the asset class in 1986. And what we did in that study is really discover that MLP infrastructure pipelines are only half of the asset class in terms of number of securities or the sectors they represent, and they're leaving out the commodity side of it, which is, again, half the asset class and the fastest growing element of MLPs today.
So is that the reason that you did it? You just saw that this was underspoken about and you thought commodities are hot, we should do this?
Well, we thought, no, it was actually more fundamental. Yorkville's been investing in MLPs since the 1990s. So we looked at the asset classes, we want to understand it better because it's rapidly evolving and growing. And so for us, it was a way that we could help our investors better and also now to educate investors. So a lot of what we found was untortured data. We were looking at it to see objectively.
It's a good phrase.
Yeah.
Because sometimes you can make those numbers dance. What were the key findings? What were things that you learned that even surprised you?
What was really almost revolutionary here was the commodity aspect of it, because when people think of commodities, they think of risk, and I'm guilty of that as well. Now, what we found when we looked at commodity MLPs, that they provided higher income, which we are investing in MLPs primarily because of a fixed income alternative. They provided faster growth of distributions, inline performance, and no greater risk.
Okay, now what are the difference between, thinking out loud here, the commodity-based MLPs and infrastructure? Okay.
What's different on them is, again, the commodity-based MLPs are generally involved in the production of commodities. But what they're not tied to is the spot price of commodities. And why not? Hedging programs or long-term contracts. So they retain the favorable toll road characteristics of MLPs, which are high distributions and consistent distributions, as well as growing distributions, without taking on any significant risk.
And of course, you have some pretty impressive numbers here as far as what you've seen. We're pulling some up now on the screens. The infrastructure index, the performances here, obviously this is a 5-year, but clearly outperforming the stock market anyway.
Oh, handily. And what you find over time, MLPs have outperformed the market, generally for the two reasons I just discussed. Number one, distributions, and distribution growth that drives ultimately capital appreciation.
Subcategories within the commodity, are they all energy? Are they various?
Well, they're various. So when I think of commodities, I think of diversification, which seems odd. So there are 4 sectors and 11 different industries within the commodity space. The 4 sectors are exploration and production, natural resources, propane, and marine transportation. And breaking it down further, within natural resources, you're getting coal companies, fertilizer companies, and timber companies.
Okay, and as far as some of the other things that maybe people are discussing with you right now, what is the most common demand, put it that way?
The most common demand is income. Where can I find alternative sources of safe, secure income? And that's what they're looking at. And right now, when we look at the commodity space, and why I said it's so revolutionary, is that you're picking up income, you're picking up growth of income, you're still delivering phenomenal asset class outperformance, and you're not picking up significant amounts of risk. So for MLP investors, they've overlooked the infrastructure side, the commodity side of the asset class, and Yorkville's honed right in on it with this study.
Okay, Darren, we thank you for coming in, giving us a little lesson. Very good to have it. Darren Schuringa joining us there, Yorkville Capital Management, right here on Money Moves.